Okay, I'm going to go over a very important point. I'm going to go over it kind of meticulously. Now, if you've heard me go over this point before, just fast forward a couple minutes ahead into the video. The point is about banking sector and loans that they make. If you understand the modern fractional reserve banking, how it works is how banks create money. Banks have a tool that they can create money. And it's when they lend money out, they actually, a lot of people think, well, I'm going to go in, I'm going to get a loan from the bank. They think that the bank has that money in the back of the vault already there, and that money already exists, that the bank's going to go into the vault and get the money out and loan it to them. This is what most people think. That's not true. It's not the way it works. The way it works is when you tell the bank, hey, I want to borrow $100,000, say. The bank, they say, okay, we approve your loan. You've got good credit. You've got a house. You've got this and that. You know, we'll approve your loan, $100,000. They don't go back into the vault and get $100,000 and bring it out to you. It's not how it works. They just simply make a notation on the bank's books that you've borrowed $100,000. And instantly, as soon as they make that notation, it goes into the bank's books. That money springs into existence from nothing, from thin air, that never existed before, the $100,000. Now it suddenly exists. Now that that money exists, it becomes a credit to the bank. The bank just made $100,000, plus they can add, say you're going to borrow it for 30 years, they can add all the interest for that 30 years to the $100,000, so now it's like $300,000. And they can just add it to their balance sheet, showing that the bank is $300,000 richer, instantaneously. As soon as they saw you walk in the door, and you said, can I have a loan? And they approved your loan because you had good credit. Now, they just suddenly tap the number into the computer, the amount you want to borrow, and so all of a sudden the bank is that much richer. Then they get a bunch of people do that. Say they get 1,000 people do that. Suddenly the bank can say, well, we made like $3 million this year in profit. So you ever seen the banks when they come on and they'll say, so-and-so bank made $3 billion in profit this year? That's because the bank was making a lot of loans. Now they put those loans as credits to the bank. All down a row. They got all these credits on their books. It's a bank. And these people are paying these loans back in to the bank, making payments on their loans. All's well and good. This whole thing works just smooth for the banks. Unless, for one reason or another, say the guy that borrowed $100,000, say he went in business, and say he goes bankrupt and he can't pay the bank back. Now, all of a sudden, the bank has to go in and say, okay, this is a non-performing loan. Well, that hurts the bank's bottom line very badly. But the thing is it's not really official. There comes a certain point, though, where the guy goes completely bankrupt. It becomes official to the bank that the guy is never paying them that money back. Then the bank has to reluctantly, very reluctantly, go in and change their books, and they have to take that money that the guy owed them, and they have to actually make, now that that money sprung into existence, even though they created it from nothing, still it's on the bank's book, and they cannot get that money off of their book, and now they own, now that it's been made official, suddenly they owe that money. The bank owes it. But remember, the bank doesn't have any way of creating money except one way, and that's when loans are made out. So now all of a sudden, this guy, he's went bankrupt and it's official. He's never paying the bank back. The bank reluctantly goes in. They write that loan off, and now all of a sudden it's a black mark on the bank's books that they're in debt. They've got to make up for that money that he's just taken out. That's just disappeared off of their books. They've got a giant black hole. Now, how can they fill it? The answer is they can't. They cannot create the money to fill that black hole. Believe it or not. They can't. They can't create the money. So now what they have to do is they have to declare that they're in trouble. The bank, all of a sudden. It doesn't take that much money to get the bank in trouble. I mean, banks can make billions on one end because if they're loaning money out. But on the other end, they can go insolvent so quick and easy. So then what do? When they can't create the money and all of a sudden they have this black mark on their books. There's only one solution. They need what's called a bailout. Or now they've invented a new solution. It's called a bail-in. But the bail-in involves attaching the other creditor's money. And nobody wants to have their money attached or take a haircut on their money. And so the banks they dare not try it. Because then the people will pull their money out wholesale out of the bank. It all sounds good, a bank bail-in. I mean a bail-in, yeah, a bail-in. I get bail-in and bail-out mixed up. A bail-in sounds good on paper. But if you start trying to take the people's money, the people get sense of that and they'll come in and they'll do a bank run and they'll take all the money out ahead of you. So the banks are very, very hesitant about doing that. What they really prefer to solve this problem, when they get too many people that have not paid their loans back, what they'd rather do is just get the government to give them a big lump sum of money to cover it all. So see, now we're going to get, now that you understand how that works, now we're going to get to what's happening in Italy. And why this is so bad is because the banks have all linked in. Interbank, it's called interbank lending. They've all linked in together through derivative contracts. So if one bank goes down, the other bank has money tied into that bank that they can't account for if that bank goes down. And in fact, the European Union, the EU, the central bank of the EU, run by Mario Draghi, is tied in with loans that he's made to all these major banks and all these major countries, where if one of these countries, like say Greece for instance, were to make it official that they're never paying that money back, it would take down the whole European Union. So this is why they lend money to Greece so that Greece can make payments. It's almost ridiculous. They'll lend Greece $10 billion so that Greece can pay them back the $10 billion that Greece owes them, so that Greece won't default on their payments. So that they can keep pretending that Greece is a good creditor and Greece is paying them back. When Greece hasn't got the money to pay them back, hopelessly hasn't got the money to pay them back, they're like, we'll give you the money, you give it back to us, and then we'll write it that you're paying us back. But they make the loan a little bit bigger each time. This is, you can see the idiocy in this, the craziness of this. This is how this is going to end in the end. They can't keep this going. And now Italy has got all these unsupported bad outstanding loans of 360 billion euros. And so what they're doing now is the Italian government is just giving the Italian banks the money that they need to keep them afloat for a while longer. I say for a while longer because it's a money pit. It's like pouring, it's like trying to hold water in a sieve. If you know what a sieve is, it's a thing that's full of holes. Or say if you had a bucket with a big hole in it, and you're trying to feed the pigs, and you're filling the bucket full of water, and you're going to carry it out to feed the pigs, but the water's all leaking out through the hole. And that's the money. The money's leaking out through this banking system, and they're just pouring it in. And it's going to get to a point where the Italian government has borrowed as much as they can borrow to pay these banks, to give these banks. They can't do it again. And they've poured the money in, and it's disappearing at like $3 billion a month. It's just leaking out the other side. You know, and of course, yeah, they've given them like 30 billion, so you can do the math. What's that, 10 more months? Maybe a year? The whole thing's coming down. The whole thing's coming down. There's no other place for it to go. It has to come down. And it's all these banks are all tied in through derivatives contracts. And if one of these banks goes down, right, then what it does is it'll tear a giant black hole, money hole, in the whole European Union. Like one bank goes down, the next bank to it has loans tied into. That's why they couldn't let any of these banks go down. That's why they had to come in. And I'm getting to this point right now. I'm going to read it to you, and you'll understand what I'm saying. They had to come in and they had to support these banks, even though it broke the rules of the European Union. It says billions to save the Italian banks. Recently, the Italian government took control of BMPS in order to save it by injecting $5.4 billion along with approval of EU officials. See, the EU tentatively went along with this, even though it breaks their own rules. The reason why is they know that if they don't do it, that the whole system's going to come down. And they're buying time. They're basically just buying time at this point. It says the Italian government is now a partner in BMPS. And the hope among Italian and EU policymakers is to put the institution back on solid financial ground. Well, I would say, boys, good luck with that one. The cause of BMPS is financial ills range from losses due to speculation on financial derivatives, underperforming investments, and overpriced acquisition of Banca Antonio Veneta in 2007. But perhaps the worst of these numerous ills are the non-performing loans that BMPS carries. In 2016, BMPS attempted to rid itself of $28 billion of non-performing loans, accounting for 36% of the bank's loans portfolio. However, in total, the European Banking Authority reported that BMPS had $45 billion in non-performing and doubtful loans in 2016. Making matters worse, BMPS has the highest portion of non-performing loans of any bank in Italy. This has caused depositors and investors to withdraw their money from BMPS, thereby causing a liquidity crisis. Bad loans are a serious financial problem for Italian banks, in which they carried $360 billion in non-performing loans in 2016. But BMPS is not the only Italian bank with serious financial problems. In Italy's northern Veneto region, two banks reported serious losses in 2016. $1.9 billion for Popolare di Vicenza and $1.5 billion for Veneto Banca. The Italian government was warned that these banks cannot be saved, since they are not regarded as systematically important enough, prompting depositors and investors to withdraw funds from these institutions, resulting in substantial liquidity problems. The result in the liquidation of these banks costing the Italian government $5.2 billion and then an additional $12 billion in state guarantees so that they could be sold to Intesa Sanpaolo for €1. They sold them for €1, the banks, the two banks. And they took a loss of 5.2 billion euros plus an additional 12 billion in state guarantees. This is the desperation they're down to. It says Italian policymakers are also worried that other banks in Italy will either need huge injections of cash or be sold to stronger Italian banks for nominal amounts. The effect on the EU. EU policymakers are very concerned about the ramifications of the situation with BMPS. The last thing that the EU needs is problems with a major European bank such as BMPS and Deutsche Bank. According to EU banking rescue regulations, investors, including shareholders and bondholders, must bear the burden of any financial bailout of the institution, not the taxpayers. But in the case of BMPS, the European Commission, which is the executive branch of the EU, gave permission to the Italian government to rescue BMPS, to rescue Popolare di Vicenza and Veneto Banca, even if it meant using taxpayers' money. So, you see here, they broke their own rules and regulations to rescue these Italian banks, and you have to ask why. I'll tell you why, because it would have taken the whole European Union down if they hadn't have. But they're only buying time. They're only buying time because the same problems that got these banks in trouble in the first place are still there. Still there. The European Commission ruled that state money can be used in these cases if shareholders and junior bondholders carry the majority of the load of costs involved and the rescue plan does not skew industry competition in any unnecessary fashion. The European Commission and the European Central Bank are concerned that bailing out Italian banks also means that the entire EU could be paying for the rescue. Yeah, the entire EU is going to be paying for this rescue, but they got no other choice because the whole EU project's going to go down if they don't do something about this. The EU will go down, and it'll spread to America. It says, also, if Greece were in a similar situation, its banks and policymakers would demand the same type of rescue plan, compounding the situation. EU nations not in this predicament, such as Germany, would deeply resent this plan since it would probably cost them substantial sums and hurt Chancellor Angela Merkel's policy if she supported it. There has been a call for reform in the Eurozone banking rules, especially from German Finance Minister Wolfgang Schäuble, in which he stated, we must have discussion on how we can change that in the future on the need for tougher banking regulations. So, the effect on Italy. While the cost to the Italian government will be huge, the rescue could actually be beneficial in the long run by injecting cash into BMPS and rescuing Popolare di Vicenza and Veneto Banca. The government is doing the best to deal with the nation's weakest banking segments. With new funds, BMPS will now have one of the largest capital cushions in European banking. That capital cushion won't last them long, because I'll explain to you why. I remember back years ago, there was Tammy Faye Baker and there was the Bakers, Jimmy Baker I think his name was, and they ran something called the PTL Club, Praise the Lord Club. Well, at any rate, Jimmy Baker, he got in a lot of trouble or something with the law or something. I can't remember exactly what the details were, but they were going broke. Now, this is back when a dollar was a dollar, way back years and years ago. Back when a U.S. dollar was a U.S. dollar, it was probably worth 4 times what it's worth now. And I remember that they got down to like their last million, and it came on the news, and they said, Jimmy and Tammy Baker, you know, they've got $1 million left, you know. That's all they got left, and their money's going fast. And then they came on there about a week later, and they said they got $500,000 left. And they come on there about a week later, they got $100,000 left. And I thought to myself, hey, you know, working class Joes like us, $1 million or $500,000 even would last us a lifetime, and it's only lasting them like a week. It's going through money like shit through a tin horn, you know. I mean, it's just the money is just flowing out of their pockets like they got holes in their pockets, you know. She had these dog houses that had air conditioning, and they were her dog houses were the size of our houses, all air conditioned and everything. She's feeding the dogs caviar, you know, at like $400 an ounce and sort of stuff, you know, and she had to go buy gold shoes, and they had to have a special gold plating on them and everything else. All this, just on and on and on. When it was endless, the amount of money that they were spending. And so that's the way with these European banks. These European banks are like, the money's going to float out them just as fast as they floated in the front door. It's going to be floating out the back door. So it says, the Italian government's sale of goods and assets to Popolare di Vicenza and Banco Veneto is reassuring move to depositors, investors, and other banks in order to head off a nationwide panic. In other words, they've given them the money now, and they've headed off this nationwide panic that would have happened. But now that the Italian government's on the hook for all this money that they've given them, that's why you haven't heard anything about these Italian banks in the news. Is because of this bailout right here. It says the government is also taking a positive step in dealing with the severe problem of non-performing loans through the creation of Atlante, a private fund designed to take on distressed bank recapitalization, while also purchasing non-performing loans from banks. Hopefully this move will create more banking liquidity and less uncertainty amongst investors, depositors, and Italian bank EU policymakers. Italy's banking industry is not out of danger just yet, despite the government's recent actions. While the rescue plan encourages stability, it's just pumping good money after bad, as far as I see. You know, it says, and allows the economy to move toward long-term growth. There is no growth in Italy. This is wishful thinking. There are still necessary actions to make sure the Italian banking industry will not have more emergencies. Oh, believe me, they will have more emergencies, such as BPMS in the future. This includes adherence to strict lending regulations. In other words, they're going to put a stranglehold on the bank's ability to make money. If you remember at the start of my article, I told you how banks make money. Well, if they put, it says here, this includes adherence to strict lending regulations. That means that they're not going to lend out to just anybody. They're only going to lend out to people who are very creditworthy, and those people are hard to find. That means they're not going to make very many loans, and if they don't make very many loans, it means the Italian economy is going to sink because nobody's getting any money from the banks to do anything. That's what it means. And it means that they're not going to be making any more loans out, and that means the bank can't make any more money. And so this money's even going to go faster that they're lending them. It's just a vicious cycle. They said this includes adherence to strict lending regulations by Italian banks and a watchful eye by regulators. In other words, these regulators have lent the banks the money right now. Here's the money, here's the money, here's the money. But you can't make any more loans unless the perfect person's absolutely perfect. See, it's like a crackdown. You know, they were lending out to everybody in Italy. This was the problem, and this is all these people were not paying them back. Now they're cracking, but the bank was making all kinds of money there for a little while, right? Now they're cracking down. The bank won't be able to lend any more money out. It means the bank won't make any more money. And the Italian economy is going to start to really suffer. So their economy, all this stuff about the economy is going to grow, the Italian economy is going to grow 2% this year, 3%, and all this stuff, that's all wishful thinking. Because the banks aren't lending out any more money into the Italian economy, because the strict adherence to these lending regulations, which means a guy has to have pretty much a perfect score lending. I mean, he's going to have to be really a highly qualified lender, and they're probably going to want high fees to lend to him, pay the money back, and so on. They're not going to find very many lenders. And so the flow of money is going to be cut off to Italy, and so they're not going to see this growth that they're hoping for. They're going to see that go into negative. And the only way they're going to be able to pick this growth up is by lying about it all, which is what they've been doing all along anyway. They've been lying about growth. So listen, thank you guys for listening. Like and subscribe. And heck, we're gonna keep you informed on what's going on in Italy as they collapse. Bye-bye for now.